So welcome to the Good Money Guide podcast, or rather welcome to Good Money Guide however you're watching or listening to us. We've got a guest joining us today, Fiona Cincotta. She's an analyst at CISI Indexed, owned by StoneX, the big American broker. We're going to have a chat about inflation, Bitcoin, some AI stocks. Jackson, who writes for us, wrote a really good piece, so we're going to benchmark that as the basis for the discussion, and we're also going to answer some user questions that we've had on our TikTok. We're trying to do a bit more social. So one of the things I put up was, ask me anything, and I will try and answer them sensibly. And there are some things that I can't answer sensibly, so it's nice to talk to other people. So, Fiona, thank you very much for joining us.
Oh, thank you for having me. Pleasure to be here.
Before we get into this, though, please remember this is not investment advice. Always doing your own research. This is just for entertainment and information purposes only. Let's just find out a little bit more about you and what you do, and then we'll dive into inflation and Bitcoin and what that means. So what do you mainly cover at CISI Index?
So I personally mainly cover UK, Europe, and US. We look at cross asset, really, foreign exchange, single stocks, indices, commodities, and really what we're doing is looking at what is happening in the world, macroeconomics, geopolitical, what's influencing the markets and how that's playing out in price action, and then also what we expect could happen as far as price action is concerned, and try to take a view on whether we think something's going to go up, something's going to go down, or whether it's going to remain consolidated.
And do you guys generally take a proactive or a reactive approach? So do you comment on what's happening, or do you look at what's upcoming and may happen?
So both, actually. So, it's great to have a look at what's actually happened, to analyse what happened, what that reaction was, because I think that's also really useful in order to be able to take a view on what could happen going forward. For example, if you see a certain reaction from a report, for example, US inflation report, if you see a certain reaction to a slightly cooler than expected report, and then you get a similar report the coming month, then, or you're expecting a similar report the coming month, then you can probably had a little bit of a gauge on how the market may react. And so, I think it's useful to be backward looking as well as forward looking. Also, as far as the actual price action is concerned, again, that tends to be, a little bit backward looking in the sense that you're analysing the charts, what they've achieved so far, but then with some analysis, maybe put some levels in there could be important going forward.
Okay. And what about from the punter's perspective? Do you see a big crossover between what you're talking about and what the punters are trading? Or do you do it the other way around? Do you look at what punters are trading and then provide comment on that? I always think that's really interesting. Is there anything interesting that people are trading at the moment?
Do you know, our most commonly traded assets are what you would expect them to be, I think. There are no major surprises. So, you're looking at Euro US dollar, Sterling US dollar, the FTSE, the DAX, obviously US indices, and then also big names, such as Nvidia, Apple. I don't think there are any major surprises. Obviously, we do get some peaks of, suddenly the US dollar, Mexican peso might be particularly popular one week if there's an election going on. But broadly speaking, it's as we'd expect it to be with the major currency pairs, major indices, and obviously gold and commodities also playing a part.
Yeah, the peso is one that comes up more often than I would have thought as well. It's quite a well followed corridor. That anyway, let's get on to inflation and what's going on there. You obviously read Jackson's piece. We've got not much going on with inflation, and so what are your thoughts? Where do you see the markets going on the back of these inflation figures?
Okay, so I mean, yeah, really great piece. And I think there has been even a little bit of an update since the piece was written just this week. Obviously, because we
I know
had
it's
UK in.
it's a nightmare. The markets move, so it's just like we try and write something so that we can talk about something, and then before we've even sat down to discuss it, it's
You've
changed. But
done.
let's look.
Yeah.
Let's not look at like, what's going to happen over the next couple of days. Let's give it a sort of
No,
medium term
completely.
view.
So, yeah, so I mean, the data was really interesting that was highlighted in the report. There was a discussion surrounding the Cantor's food inflation, grocery inflation, which had cooled to 2.1%. That's the 16th straight month that we've seen cooling food inflation. And as he highlighted in the report, that sort of pointed to a cooling inflation more broadly in the UK, which came out today. As he, suggested that it cooled to that 2% level in line with forecast, down from 2.3% in April. But there was sort of some surprises in the report. We saw that, well, surprises maybe not actually. Service sector inflation was a little bit hotter than expected. Still sticky at that sort of 5.7% level, down from 5.9, but missing forecasts of 5%. And we know that the Bank of England is keeping its eye on that service sector inflation, which is actually quite closely tied to wage growth. And we know from a report earlier in the month that wage growth in the UK is still proving to be quite persistent as well. So, that's the UK. But then we've also had data from the Eurozone this week. We saw Eurozone inflation actually increase to 2.6%. That's up from 2.4%. So again, signs of a little bit of stickiness. We know the ECB have already cut interest rates once by 25 basis points. There are a few doubts about when that next rate cut might come because of this stickiness in inflation. And again, this comes as we've got the Eurozone unemployment is at a record low. Wage growth for the first quarter came in stronger than expected. So, we're seeing those price pressures. And even in the Eurozone, there are differences. Spain, for example, is you've got inflation almost at 4%. So stronger levels of inflation where service sector might be a little bit more in play. And then we've also had last week, inflation from the US. I mean, the market got a little bit excited about the getting a little bit cooler, but at the end of the day, inflation in the US is still 3.4% annually, which is, it's well above the Federal Reserve's inflation target of 2%. So I think broadly speaking, if we were going to sort of put this under a broad paintbrush, we would say that inflation is trending in the right direction, not as quickly as we'd like, and it does appear to be a little bit bumpy, and there's sort of signs of struggles as we're getting closer towards that 2% level, which I think, is just unnerving the market a little bit.
So let's talk about that actually, the correlation between inflation and the market and how they react to each other, or rather how the markets react to inflation. If inflation carries on trending as expected, where do you see the markets going on the back of that? And I suppose the real question is, if inflation goes up, what happens to the market? If inflation goes down, what typically happens to the market?
Okay, so usually if inflation goes up, that just raises concerns that central banks won't be able to cut interest rates. Therefore, they will, or potentially even hike interest rates, but we're not there right now. And that means that that's bad news as far as the markets are concerned on two accounts. Not only does it mean that sort of, households will have less money to spend because they're paying out more for mortgages, and also inflation being high means that, the cost of living is expensive. So, less discretionary spending, less spending on services. And then you've also got the idea that if interest rates are high, then for businesses, that's bad news because they're not able to expand and invest perhaps as much as they would want to and to borrow. So that would have a negative effect on companies. So you'd expect those to be held lower or a weaker demand to buy into stocks, for example. And we've seen that as inflation and as interest rates went high, we saw that the market did take quite a dip. And then as inflation has cooled and as expectations that the Federal Reserve, the Bank of England, major central banks will start cutting rates has increased, then that we've seen result in a rally to all-time highs in several indices across the globe so far this year.
What would you punt if you were taking a view on inflation? If you think if you were to think inflation is not going to do what everybody thinks it's going to do, is there a market that you think reacts well to inflation figures, be it a currency, a commodity, or an indice? What would you say is a good market to trade around inflation?
Do you know, I think the traditional market is gold. I mean, that would be your traditional sort of way to get exposure to inflation. Obviously, then there is, dependent on which country, there's the currency of that country, which I think is also a really good reflection of inflation expectations. So obviously, you know, if you're talking about Eurozone inflation, then you'd be looking at the euro probably against the dollar, maybe against the yen, depending on sort of, you know, what we're expecting for inflation in the other side of those currency pairs, if you like. So they'd be really good. And then, as we sort of saw in the article, I think, you know, there's also Bitcoin, which actually lends itself increasingly well
Bitcoin.
as we got there to a hedge against inflation as well.
So why do people say that Bitcoin is an inflation hedge? I mean, everybody loves trading Bitcoin, everybody loves investing in it, everybody loves talking about, regardless of whether or not you think it's the future of currency or it's a completely made up thing, it's still considered an inflation hedge. Why do you think Bitcoin is considered an inflation hedge?
I think there are two reasons behind it. Firstly, it is a finite resource. So, you know, there is just 21 million Bitcoins that can be mined and that can be in the system. So that automatically, I think, means that it's a hedge against inflation. And then secondly, well, actually adding into that, we also have the controlled release of those Bitcoins. So we have these halving events, which occur every 4 years. We just had one in April, a few months ago. And that also reduces the amount of supply into the system. So again, just meaning that it does hedge itself against inflation. It does protect against inflationary rises in Bitcoin itself. So, I mean, the latest halving event saw the number of coins released to 3.125, down from 6.25 for miners as the rewards for each block. So, so between that finite idea of supply, the slow release of supply, and also the fact that it's a decentralized nature to the cryptocurrency, to Bitcoin, I think again adds to that idea that it's a good hedge against inflation.
Do you think it's more of a sentiment-driven asset than a hedge against inflation, though? I mean, it's been sitting on all-time highs for the past few months. And I mean, I don't know, personally, I think it's just massively sentiment driven. I think the chat about it being diminished as a hedge against inflation, it's just an excuse to, you know, for crypto lovies to talk about it. I must buy some someday. I've never actually. Maybe I'm just jealous because I've never actually made any money.
We didn't get in at the start.
I know. I was sitting next to a guy at dinner the other day, and I was you know, rubbishing on crypto, and he was saying, no, it's actually a thing. It's actually going to take over at some point. And he was he was quite a sophisticated trader in the debt market. So it's really interesting to get.
Do you know? And I also think that the approval of the Bitcoin ETF at the beginning of the year by the SEC, the US regulator, I think that was a historical moment for Bitcoin, because that actually gave it a sort of changed the landscape as well. It gave the potential for the changing landscape for investors. So it suddenly gave more sort of authenticity to Bitcoin. It sort of meant that institutional investors were more likely to get involved, and we've seen that. So, I think that was actually sort of, quite a watershed moment as far as Bitcoin was concerned, from it just being this sort of, fun thing to watch that retail traders enjoyed, and it seemed to sort of experience a lot of fear of missing out trade,
FOMO,
actually into
exactly. Even
something
on the
much more
institutional side.
serious. Yeah.
Yeah, you're absolutely right. And I remember I did a podcast actually with someone um, about the ETFs being launched, and it was a bit of a damp squib, wasn't it? Really, I think everyone was expecting a massive rally afterwards, and the price actually came off. But I think that was all
Yeah.
the institutional money just holding fire. And one of the things they were saying is just the flow of institutional money that has gone into these ETFs has been incredible, because there are so many funds, it's just outside their remit to invest in unregulated off exchange products. But as soon as these things come on exchange, it becomes much more widely available,
Yeah.
much more widely
Yeah.
available to people. But having said that, you mentioned it earlier, Nvidia and AI stocks. Bitcoin has almost been usurped, and in fact Jackson mentioned this in his analysis, that AI stocks are all the rage at the moment. Some of the returns you get from AI stocks have been better than the cryptos that have popped. So, what's your view on AI stocks versus crypto? That'd be a good trade actually, if you could get an AI
Yeah.
basket and a crypto basket and trade the divergence between the two. I think that would be a good pairs trade. What's your
Completely.
view on AI versus crypto?
Yeah, the timing here is really interesting as well, because as we mentioned before, sort of, crypto has been in this trading range. It's been stuck in a bit of a range after hitting that all-time high of just below 74,000 back in March. And it's just stuck in that 60,000 to 70,000 range. Not able really to make a big move out of it. And at the same time, we've seen this phenomenal rally in AI stocks. We've seen numerous record highs on the S&P 500, on the Nasdaq. So it does sort of raise questions about, actually, are we sort of seeing the investors are sort of, rather than going into Bitcoin right now where it's at this sort of range trading level, are actually being more drawn into S&P 500, Nasdaq, AI stocks, which have had an absolute phenomenal run up. Nvidia just overtaken Microsoft and Apple as the most valuable company in the world, $3.3 trillion. Just 2 years ago, it was 300 billion, and if you go back, the statistics on the percentage rally that Nvidia has had since it was listed, I think it was like 591,000% return, phenomenal numbers. And even just this year, 170% rise year to date, 40% over the last month. And what's really interesting is, whilst there are some sort of concerns, is this a bubble? I think we're seeing the fundamentals behind the Nvidia rally. We've seen the earnings have been really impressive over the last few quarters. Forward guidance has been extremely impressive, and then the following quarter has beaten those. So we're just seeing that actually the fundamentals have come through, and that's as the sort of AI real life case use is also just really coming into play now. We just feel like we're just at the edge of really understanding what this could actually do for different sectors, for different businesses. So I do think there is still a lot of potential for the AI stock, and also for it to broaden out this AI rally, because I think that's what we're missing out here as well, is that AI rally has the potential to broaden out as different sectors make use of AI technology and sort of discover how best that it can increase productivity. Because we've all noted, I think, that the rally in the S&P is looking a little bit vulnerable, in the sense that it is so dependent on Nvidia and other AI stocks, sort of direct AI stocks. So I think, as we see that broaden out, then there is a potential for more of an uplift in stocks at the moment. But yeah, but that's taking the limelight off Bitcoin, which has had this consolidation period, which it's still stuck in this consolidation period. And I think until we get a rise above or below that 60 level, then I think there is the potential for AI just to steal the limelight still.
Yeah. Yeah, I completely agree. And I think the other thing about AI is as you said, there's a use case. I still haven't been able to figure out what Bitcoin's for, other than potentially for something in the future. And of course, I understand the value of the blockchain, but Nvidia and AI stocks, there's a use for them. There's a profitability behind them. There are customers paying to use these things. It generates money rather than just speculation. And actually, on your bubble point as well, there's always been and always has been a lot of talk on PE ratios, and if you look at the PE ratios that AI stocks are trading off versus some of the stocks that we've seen before in the tech bubble, the PE ratios are much lower. They're much more, they're much more reasonable. So if I actually, I suppose if I was to do an AI crypto trade, I'd probably be looking for AI to slightly win. But what do I know? I mean, that's why I'm talking to you. You know what you're talking about. So should we move on? Should we move on to some user questions? I always think these are interesting. And actually, on this, if anybody does have any questions for us that you want answered or us to discuss or speculate on, drop them in the comments, and we will address them in the future. So a question from someone on our TikTok has asked, I'm currently doing my CISI exams. Do banks like these, or do they prefer CFA qualifications? So what's your view? Banks?
Well, I personally have CISI. That's what I studied. I think potentially if you want more global mobility, potentially sort of recognized more internationally, then I would go with the CFA. If you're just more domestically focused, then potentially the CISI is fine, in the sense that it's also a little bit more flexible and also potentially not quite as time demanding. So I think you just need to sort of weigh up what you think your potential uses for the qualification could be, where you want your career to be going. If you are thinking maybe an international slant to it, then definitely CFA, sorry. And if perhaps you've got a lot of other stuff going on in your life at the moment, and having all those hours to study is not quite where you are, then, and you need a little bit more flexibility, then maybe the CISI would be the one to go for.
Yeah, and of course, if you've got a bank or a firm in mind, just phone them up. It is possible still to talk to people these days. You can always you can always phone up and ask and say what you prefer. But no, I haven't got a CFA. I got my CISI though. I remember taking my my CISI exam. The guy who sat next to me on the trading desk had failed it 8 times, I think, or something like that. And obviously, before you're regulated and talk to customers, you have to get your qualification. So I was so nervous about taking it that I didn't tell my boss. I just went off and took the exam without telling him, in case I failed it. It would massively embarrassing. But CISI.
So do you know? I remember mine, and I came out and I was convinced I'd failed. When you have an exam, you just generally have an idea, don't you? You feel like it went well, or well, no, don't think that really went my way. And I came out absolutely convinced I'd failed, and no, fortunately, it was good news.
Yeah. Well, that's what they say, isn't it? The more confident you are coming out of an exam, the more likely you are to have failed. I think that's why I've never done very well in an exam, because I've always been extremely confident. Anyway, so we've got another question from a TikTok user. How much money do you need to get started in trading in your world, in the City Index Forex.com world? How much do you need to get started?
It's not actually that much, but it depends on what it is you're looking to trade, because there are margin requirements. So that's sort of the percentage that you'd need to put down of the value of the trade in order to even open the trade. So now that percentage requirement changes for different assets, and different, whether it's going to be a spread bet or a CFD or so you can do small trades. That's fine, because, and I think that's, if you're just getting started, that's the way to do it, so you don't have sort of too much sort of trading psychology to be dealing with in your head at the same time as trying to understand the actual sort of operations and processes that you need to go through, as well as trying to get your head around the market. So it's quite a lot to deal with all at one time. If you're going to go in big, then adding in all that trading psychology, it's a lot. So yeah, you can start small. You can start. If I was going to even put a figure on it, well, I think maybe £100 even. Because if, as long as you've got enough to cover the margin, but you also need to have enough to cover sort of swings in the trade. So, if you know where you're going to put your stop loss, if you know where you want your limit to be, then you can sort of figure out how much you're risking, how much money you're going to need in the account in order to be able to cover that. There are great examples on the websites to be able to do those calculations. Obviously, you don't want to put too little money in there, because if you don't have enough in there to actually cover the trade, you can get stopped out by the company because you've not got enough in there to be covering the losses on a trade if it goes against you. Other thing to bear in mind, obviously, if you're trading CFDs and, for example, single stocks, then there are going to be commission charges. They're probably going to be sort of your biggest upfront costs. So, also just keep an idea on commission charges. You don't want to be paying more in commission than you could ever possibly make on your trade, because that just wouldn't make any financial sense at all. So, there are the things to be bearing in mind. Obviously, if you're planning on keeping a trade open for a long period of time, also just keep an eye on financing charges, that overnight costs that might be associated with your trade as well. So, get a good idea of what your costs could be, what size you feel comfortable with, and only ever trade with money that you are comfortable to be putting in there and potentially, worst case scenario, could lose.
Yeah, you have to say that. That's the most important thing to say. Never trade with money you can't afford to lose, and of course always look in percentage terms, in terms of like how much money to trade with, as a percentage. 5-10% of your portfolio probably max. Like, the rest should be in sensible, boring investments, and trading's your fun money. You don't want to put all your eggs in one high risk basket, completely based on your decisions. So there we go. Good answer.
Yeah, and I've got a question for you as well, I think.
Go ahead.
Yeah. So how much money have you made from trading?
So this was another one from our TikTok account, and the answer is obvious, isn't it? Not a lot, because if I made a lot of money trading, I wouldn't be talking to you. I would be living on an island somewhere, not doing any work, making loads of money from trading. There's a couple of points I'll bring up here. Like, one, I'm a natural bear. I've always liked to short the market. I've always looked for short opportunities, which obviously we have been in a massive bull run for pretty much as long as I can remember now. So those opportunities are few and far between. So actually on that, I'm doing this thing. We're trying to do a bit more social. So I'm doing, investing $100 every day for 100 days, and looking at different asset classes, different things, because obviously being a bear in a bull market is not that enjoyable, and we must practice what we preach. So we're looking to doing a few short vids every day of various different things to invest in. And the other point actually I'd make about people who claim to make a lot of money from trading, because we're doing more social, we obviously see what's going on social, and it is absolutely shocking the amount of people who claim to be making a lot of money trading with, particularly on TikTok and Instagram. It's just absolutely terrifying, with who pose with flash cars and watches and the sort of thing that any regulated firm's compliance department would have an absolute fit about. Just if anybody comes across those sorts of people, be very wary. Trading educators who present themselves as lifestyle traders and profitable traders are not, I think, for a better. That, if I was to give advice, that would be advice. Obviously, we're not giving financial advice. We can't do that. We don't know your personal circumstances. But that's just something to be wary of. I think if you ask someone how much money they make trading and they tell you they make a lot, people who make a lot don't often talk about it. And one thing they certainly won't want to do is share with you how they do it. So just be very wary of that. Anyway, Fiona, I think that pretty much wraps it up for today. I think we've pretty much covered everything we wanted to. Is there anything else you'd like to mention or discuss or highlight? Anything fun going on at CISI or Forex.com that we think we should be following?
No, this is it. It's all about inflation right now, isn't it? I think inflation and AI are the big focuses for us right now. And Bitcoin, well, we're watching and waiting for Bitcoin.
Okay, excellent. Well, Fiona, thank you very much for talking to us. It was a pleasure to talk to you.
Thank you.